So I just poured myself a cold beer. I'm drinking it's a local craft beer from Mother's Brewing Company in good old Springfield, Missouri. Popped me a cold one. Brad, what are you drinking tonight, bud?
I'm a whiskey drinker tonight, sir. I am drinking Oceans, by Jefferson's Oceans, and it's a fantastic beverage, and it was a gift from one of my Discord members. And I only allow myself to have one glass at a time because it is that good that I don't want to have any sort of buzz for the second glass.
Dude, I can't do whiskey. I can't do it. Like that is.
I can't do tequila.
Oh, and I can do tequila. That's weird though.
Actually,
like how,
I can do tequila.
I can't. Say, you did margaritas, like.
Yeah, I've never vodka. I don't even think, like, not even vodka. No.
Is it a taste thing or is it like I'll get to schmeisted thing?
No,
or is it both?
I never enjoyed a vodka drink. Anytime somebody's ever tried to make me a vodka drink, I can make it with gin so much better. But gin makes me take my clothes off.
I do love me a solid like gin and tonic.
We're gin and tonic guys. That's gonna be a bad day.
But I don't have hangovers with gin and tonic. That's what I love. Like my goat.
I'm not worried about a hangover. I don't not eat an apple because it's going to become a core. I don't think about the after effect.
I have to now, dude. I feel like when I wake, well, you've seen it. Sometimes half my day is ruined. I don't know.
Are we recording a podcast right now?
Well, yeah, we are. Let's get in and talk about some money. Let's talk about some stocks, and we're gonna drink beer and buy stocks. Let's go, baby.
There goes our first 2-star review on Amazon.
And he's like, these guys are freaking morons. What am I doing listening to this average money podcast? No, guys.
But guys, please, if you're going to leave us a 2-star review, can you at least mention that JJ, has to start drinking whiskey?
There's no way. I'll never do it. It's a taste thing for me, bud. I can't do the taste.
With the beard?
Can't do it.
It tastes delicious.
Seriously, dude, I can't do the taste.
I think you had scotch. I don't think you've had bourbon because scotch is weird.
I've had bourbon too. Can't do any of it, man. None of it. Really dark. Almost
what about
dark.
Jack and Coke, bro?
Nope. Can't do it.
You are a crazy person.
I just a taste, man. I'll smell it and it just makes me sick.
Oh, it makes me think of Grandpa.
Can't do it. I trust me. I wish I could drink just like whiskey on ice. I wish. Like that's just it's badass. Like you sound like you're a badass if you can do that, and I can't. I'm a little I don't even know what to say.
I remember when I just turned 21, the thought of a shot of Jameson would be like I would have to be 3 sheets to the wind.
Yeah.
I can drink that by the bottle now.
No way, but I do love vodka. It's like it's the clear and dark stuff, man. Like clear
rum?
liquor I can do.
No Captain Coke?
I can do rum. But again, like it's weird like I don't ever drink rum really, unless it's in like some mixed drink or whatever. I usually don't drink rum, but I can drink it, yes. But I like clear instead of dark. It's weird.
You do have a nicer beard than me, so I can't come at your manlyhood or nothing. You'd be like, oh yeah. I also like Twisted Teas and White Claws, but you want to know what? Check out my beard.
Bam. But I don't drink just Twisted Teas.
And my sleeve tattoo.
Bam.
Can't touch you. We do have a voicemail. This is going to be, we promise.
Yeah.
I'm not even editing that out. We're gotten to the point. They need to know.
They got to know a little bit more about us. I mean,
when they come see us in Asheville, do not get JJ
a whiskey.
But send Brad I dare you to find a better whiskey than Jefferson's Oceans right now that you can get in a store regularly. I would say that this Jefferson's Oceans is probably like the best whiskey that's regularly on the shelves. Call me a liar.
Cool story, bro. Let's get into this voicemail. No, so back to the Average Money Podcast. Tonight's voicemail is a good one. And it's a very, very good question. And you've probably seen it in the title. And it's something that a lot of people really don't think about until they get in this situation. So tonight's voicemail comes from Dan.
Hey, JJ. Hey, Brad. My name's Dan. I've been watching both of your guys' YouTube channel for quite a while. Love what you guys are doing. Keep up the great work. And also been listening to your podcast since the beginning. And it's super helpful and super insightful. So I really appreciate it. And thank you guys for coming out with that. I guess my question is, I have a single stock in my individual Robinhood account, Caesars Entertainment, ticker symbol CZR, and I am up over 2,000% on it. I believe I bought in at $8, and I guess my question is, how do you know when to sell a stock? As I know a lot of the markets are overvalued right now, and I would consider myself a buy and hold long-term investor, but at the same time, I just wasn't sure when the right time to sell is. So appreciate it. Thank you guys.
So this is a tough one, and I want to first start off and say this, that you'll find out if you guys start buying and selling stocks or whatever, that actually buying a stock is a hell of a lot easier than determining when to sell it. Selling it is the hardest part whenever you're dealing with, buying and selling stocks. Selling is so much harder because do you sell whenever you're down? Do you sell whenever you're up? Do you sell whenever you're way up? Like my boy Dan here on the 2,000% return. Congrats to you, by the way, bud. That's amazing. Now, I don't know if he meant he only has one share or if it's his one stock that he has.
He definitely has more than one. I bought in. He wasn't like, I have $8 to invest, I'm going to buy one share of Caesars. He has at least two.
So let's do
In my opinion, he has at least two.
If Dan invests, let's just say Dan invested $1,000.
No, take 100. I think 100's more realistic for people. Like,
okay,
I know a bunch of people that are like, I'll throw $100. I have friends that put $100 in Dogecoin, whatever. Like, maybe he was like, Caesars, I'll throw $100 on there. So call it 10 shares.
Be $2,100 if you bought $100 worth. 100% or 2,000% increase would be $2,000 that in profit.
Yeah.
That's insane.
Mm-hmm.
That is insane. That's a two-bagger, baby.
I'm more curious, like, I guess, being in the biz, can I say that? I'm more curious how he knew about Caesars at $8.
I'm going to guess it was one of those, because I remember being back at the Roni, which we can say COVID. We're not on YouTube right now.
Yeah, we can say COVID, yeah.
I remember when COVID hit, and all the stocks were like getting hit heavy. The cruise line airlines, the like Las Vegas, casino type stocks.
Yeah.
I remember. I don't know if you guys remember, but I told my PIN story about how I almost put $5,000 on PIN at $350.
And I own it. Let's go.
Now it's up over $110 or whatever it is.
103 today.
Jesus, insane, dude. Anyways. It probably was just one of those things where he was looking at casino stocks. He probably saw Caesars. Hey, I think Caesars is going to make it through this. Maybe bought a few shares. Bam, now he's up 2,000%. So back to what I was saying, and Brad, feel free to chime in whenever you want.
When was it $8? Was it before Corona?
Yeah, April. They were trading around $8.
April of last year.
Yep, April of 2020.
So, all right, we'll get to capital gains tax in a second, but.
Yes.
Because that's another reason I wanted to know when it was 8.
For sure. That's a great point, by the way, because I wasn't
So he
bringing
did
that up.
2,000 in a year.
In a year.
This is not one of those like old heads that's been holding on to Apple since it was, and it's over the last 30 years. This dude got in a year ago, and he just popped 2,000%. Oh,
insane.
I'm so fired up for you. I'm not jealous. I'm not hating. I am just straight up fired up for you.
Dude, it's so awesome. It's just... Oh, I just love these
I love hearing people wins. Yes.
I know. It's amazing. So here's my first thought when I heard this.
Okay.
It was one thing I always kind of talk about, and this is more in like maybe my options plays more than anything, because I'm like what Dan said. I'm a pretty typical long-term. I don't plan on ever selling, la-di-da-di-da. I just want to add to my position. Now, I'll usually say I'll sell my initial investment, and then I let everything run on house money. So like that's a pretty good way. So that way you're automatically never going to lose money. Now you have unrealized gains you could lose because you haven't sold for those profits yet. But I also need to say this to make it clear, and none of this is financial advice in this podcast. I am not telling you what to do. Dan, this is a decision you have to make. But this is just my opinion on things I would think about. First one is, it's never a bad thing to take profits. It's never a bad thing to take profits. But with that, I got to give an example. Well, okay, let me say this first. So it's not a bad thing to take profits. Remember that. But here's something else to think about when you're thinking about selling a stock. If the fundamentals of a company are way out of whack, and the company is way overvalued. You think the growth's gone. It's just been constantly going up month after month after month, and you haven't seen any pullback whatsoever, no correction. And now you're up 2,000%, and fundamentals are off. And I haven't looked enough into Caesars to know if fundamentals are off or not. But that could be a sign to say, hey, maybe I want to take some profits off the table. Maybe I want to sell half my position. Or maybe I want to sell all of it, or maybe I want to sell a quarter, or maybe I just want to sell my initial investment. But the problem with that is I have a great example. I had this happen to me. I own Tesla. I had an average price of like $225 or something like that, pre-split. This was like 2 years ago. 2.5 years ago, I owned Tesla. Tesla, when they first, if you guys remember this, Tesla shot up to like $900. It was like within a month or two, I believe. They shot from like 300 and they shot all the way up to 900. It was like, this was like right when Tesla had their first big pop and everyone's like, oh my God, Tesla, holy crap. I was one of those guys that looked at the fundamentals. Tesla was overvalued at that current time at night, trading at $900. It was a bigger market cap than Ford and a couple other companies, whatever. I'm like, there's just no way there's no way this company can keep going up. I sold it like 900 or 875, whatever it was. I sold my entire position in Tesla. And then they dropped a little bit. I felt like a genius. I'm like, wow, I'm a stock. No wonder I'm a stock YouTuber. Like, you know,
stock guru.
That's right. They dropped down to like 750 or something like that. And then literally ever since then, they've just continued to go up. Then they had their stock split. I think it was a 5-1. And I'm listening to all this news, and now they're going all the way back up. Now they're at like over $700 again after a 5-1 split. Like, I kick myself in the butt all the time. So that's something to think about also, you know, like, now I think Caesars and Tesla is kind of two different companies in totally.
Right.
But you could definitely sell your entire position, but Caesars could also go to $200 next. Like, those are things you need to be okay with. Like, do I kick myself in the butt over Tesla? Yeah. I mean, I wish I would have cut maybe a few of my shares. Definitely. But that's what you got to decide as an investor. And that's why selling a stock is one of the hardest decisions you'll ever make when it comes to investing.
Shoulda, woulda, coulda is very real.
So true.
And you hear coulda, shoulda, coulda, woulda a lot with the Bitcoin space. And it's like, dude, yeah, cool. You got it when it was $100. You got it when it was $50. You wouldn't have held through that first 18 pop. You would have, like, don't tell me about how you would have now if you would have waited. So I like your shoulda, coulda, woulda. I definitely want to reiterate something that you said, and it doesn't really happen very often, but with like 100% return. Now, I personally have stocks that are designed strictly for options plays, the wheel strategy. So I own 100 shares in certain stocks that I know I'm going to pay short-term capital gains tax on because I'm buying and selling them. But I'll tell you this, with my buy and holds, when I purchase a stock that I have no intention of it being an options play, first off, I'm not going to sell until I have long-term capital gains tax, because there is a significant discount, especially if you're a high earner, to wait that 1 year. That goes into the things that I think about. I definitely think, okay, even if it's a spec play, my spec timeline is 1 year. Now, is there a chance that one of those stocks could start as, you know, buy and hold, and then I get to 100 shares? I'm like, oh, maybe I'm going to start wheeling this. That's a little different. So, but when I think first initially, when I buy shares that I don't have 100 shares of, and I don't plan on trading options with them, I'm not even going to consider selling until I have capital gains tax. It's too much of a percentage. Like, if I'm not willing to wait a year, for me as a 39-year-old guy, as a boomer, I'm not going to make that investment.
So you're meaning long-term capital gains.
Oh, I'm sorry.
Short-term.
Yeah, was I saying short? Yeah, like if you buy a stock, and some people may not know this, so if you buy a stock and you sell it between now and 364 days from now, you are going to pay short-term capital gains tax on that, which is the same as your income tax. If you wait 1 day more to 365 days, that drops to 15%. And it also is taxable at certain percentages of your income. So if you have a really, really low income, you can get that tax rate down to 0. It's a very low income. And it changed all the time, so I'm not going to talk numbers. But for me, there's no reason to pay, in my case, double the amount of tax to not wait a year. So that's like really important to me when I sell. Like, this is about like, when do we sell? my stocks that I buy, that's the first thing. Did you want to say anything with that?
I do. I got to play devil's advocate as you do for me, because I think it's important to get both opinions on this.
Yeah.
I totally agree with you on that, on like short-term versus long-term capital gains, but I don't want an investor out there to hold a stock that they're not comfortable in holding just because of a tax purpose. And I knew you would probably agree with me on that.
But let me play devil's advocate back.
Go ahead.
If something bad goes with a stock, capital gains tax has nothing to do with it. If anything, they're going to benefit by lowering their net capital gains. So you shouldn't. I'm not saying that you're tied into it for a year. If things are going absolutely shit and you're like, I got to get out of here. Well, then
company's going bankrupt and all this.
Then capital gains tax doesn't mean there is no capital gains tax with that stock.
Right.
So if anything, you're going to sell it to become less uncomfortable, and then you'll get the net tax on your capital gains. But I did want to say the next thing is it doesn't happen very often, but if I hit 100% return, and I've only done that with one stock, Vuzi, so far in my whole life. If I make, and Bitcoin, if I make everything back, I've had a 100% return, there's a very, very good chance that I'm going to sell off my investment, right? Because if you put in $100, 100% return, you have 200. I'm probably going to, like a cash out refi on a real estate property, probably going to take my money out and know that whatever happens with that stock between now and whenever, it was house money. Like, there was all returns. And I think you mentioned that.
All of your stocks, you'd do that? Because I wouldn't do that. Like, I think 100% is actually pretty small in the grand scheme of things. Are you doing that on just certain stocks?
100%. Okay. 100% 100%.
So let me ask you this then. Because I don't know if I agree with that. Because just hang on.
You said before, didn't you, that you wanted to play with house money?
Yeah, if I'm up 2,000%, if I'm up 1,000%, like if I'm up 100%, no, like I probably won't sell any of my stocks unless they're like spec plays or whatever. If they're my long-term positions, no, I'm not selling them. But here, let me ask you this. This is a good question. Do you have stocks that you will hold no matter what? Let's say you own a stock that's up 2,000%, like our good old boy Dan.
No.
Really?
Do I have a stock that I will hold no matter what?
No matter what? Like no matter how high up how big of a return you have?
Oh, we're talking no matter. Well, you're saying no matter what? Are we talking like bankruptcy? Like no matter what the share price is?
No. Sorry, I should have said that better. No matter what, and like how high of a return you have is what I should say. Like if you own Apple and you're up 1,000% in Apple, do you think you should take some off the top, or like what are your thoughts on that?
I'd probably take house money on 1,000% Apple.
Okay. So I'd
probably take my investment out and move that investment somewhere, because for me, when you make 100% return, that's like paying off the mortgage to me.
But I don't
owe anything. Like that was some of the stocks that I have in the wheel strategy where I've made enough premium to cover the cost of the 100 shares. Those are literally free. They're like little 100 share little gifts. They were free.
No, I know, but listen.
And that makes me feel warm and fuzzy. So if I have Apple literally for free, that makes me warm and fuzzy.
But if
I'd probably do it.
Hang on, I gotta say this. You gotta say this. But if you're owning Apple and you're up 100% and you bought them undervalued, and now they're up 100% and they're fair valued, and fundamentals are all still intact, nothing's out of whack or anything like that, you're saying you would still sell your initial position? Because I wouldn't on that aspect. I would if I was up 100% Apple, I bought in an undervalued portion over let's say over 6 months, Apple went up 100%, or over 12 months, whatever. I wouldn't sell it. I would just let it keep riding.
I'm not saying that like I have 100% alarm clock.
Okay.
Because another thing with my long-term stocks, I don't check them daily or even weekly, maybe monthly. And so it's not like I get an email. It's like, boop, boop, Brad, just to let you know, you hit $100 on Apple today. Make sure you take your money out. If I was doing my quarterly look and I saw, and maybe I'm up 135%, am I going to take it all out? No. I mean, I'd be lying to you if I said like this is more of like a rule of thumb for me. But I'm saying like definitely in the thousand, even like, I don't know. Eventually, if I looked this month and Apple was at 135% for me, there's a pretty good chance in the next 2 quarters that I'm going to take my money out and put it somewhere else. Just like you like the feeling of not having a mortgage, even though it's probably not the most beneficial thing, it just makes you feel warm and fuzzy.
Yep.
When I look at a stock in my portfolio and I look at the amount of shares and I know that I didn't pay for any of those shares, that's what winds my clock with the wheel strategy. And I just mentioned it, like the fact that I can own a stock, 100 shares of it no less, and I didn't pay anything for it, that just winds my clock.
Yeah, no, I mean, I get it.
Now, if I was invested in all of like the companies I wanted to invest in, like I'm not going to take all my money out of Apple and then go put it into AMC or GameStop. No, I'm not going to do that. Yeah. But if I was like working on some other things and I was seeing some growth, like would I pull out of a 135% position in Apple to maybe try and like boost up Tattoo Chef, free up some money to get into Tattoo Chef, the next thing that I want to get to 100%? Yeah, I'm going to do that.
See, and I look at that and I'm like, I don't think I would. I think selling positions to go buy in other ones like could be a potential mistake. Now, it could also be beneficial if that stock turns around and goes down, but I think where, let's say, I would rather put my own capital more into Tattoo Chef now that they're down a little bit right now. Like, instead of selling off a position because I'm up decent that I think could still have room to grow, like that's maybe another good follow-up question. Like, let's say you're up 100% Apple and you can expect another 50% growth. Would you still sell your initial position? Because I wouldn't.
I'm going to ask you that. I'm going to answer that with this.
Oh, here we go.
Let's say you had Bitcoin at $5, right? And when it became $10, you took your $5 out, right? Then it did what it did, and it went up to $55,000, and you never sold that other bit, and it went to zero. You got nothing. You're like, damn it, I got nothing. But if you didn't take house money and it went up that high, you lost $5. So I'm pissed.
I mean,
I'm just pissed. You lost money. The fact that I don't need to watch
comparing Bitcoin and Apple is a little different.
I'll use Vuzix. I did it with Vuzix. Right now, for the people in my Discord, with the exception of the premium I paid for the options call, every single share of Vuzix that I owned is free.
But I wouldn't. I mean,
didn't pay any money for it.
Brad, I'm trying like I get what you're saying, but it's not like Vuzy and Bitcoin and stuff. Like, I would totally agree with you. If I'm up 100% in those positions, like those more speculative type plays, yeah, I'm pulling my initial. I will probably pull some of my money out, maybe not all of it.
So you're basing your house money with.
Dude, my solid long-term ride or die stocks companies like my Apples, my Googles, my PayPals.
All right, after 25 minutes, I could probably say that like maybe I would leave. Like, I think of it more of like stocks I just don't look at.
That's what I'm trying to get at. It's like I don't want you to think about
I don't
any
look
of those.
at Pepsi. I could like when
That's
I say
it.
like
okay, no, hold up.
I could be up.
I gotta stop you. I gotta stop you.
I could be up 100% on Pepsi right now.
Yes.
I could be up 100% on Pepsi right now. I wouldn't know because I don't look at it.
But if you did know, would you sell your initial position?
Well, then I would know.
That's what I'm asking you. If you knew you're up 100%, would you sell? Because I don't think you would, man.
I might, dude.
Really?
If I knew.
And you had 30 more years to let Pepsi grow?
It's going to grow on house money or with my initial investment in it regardless.
So why not let it grow with more of a capital position that you own, more of a bigger position?
Because for me, there's no better feeling than not having to worry about losing money if it goes to zero.
Okay. I got it.
Because we're not talking, I said 5,000 Bitcoin. Like
this is a really good conversation to have in Discord because I want to see everyone's episode on our episode reactions channel.
Yeah.
I want to know what people would do. I'm very and I'm only focusing this on long-term, your solid core positions. Everyone has them. You know your core solid positions. I'm not talking about spec plays. I'm not talking about more risky plays. Like true core positions in your portfolio?
Can I give my official answer now to his question?
Sure.
We'll move past that playing with house money.
Go ahead.
My official position is gut feeling, which seems cliche and crazy, but I think you can apply this to any investment there is. If you are thinking about, we say something in our Discord, and I think it was Luke was the first person that said this, but I don't know who it is. Like, people take screenshots of their portfolio, like, blah, blah, blah is doing really, really good today. And we say, dude, or like, what should we do? And it's like, if it's good enough for the screenshot, it's good enough for profits.
I love that.
You know? And it comes down for me, and I think this can kind of clear up the last debate that we were just having. If any investment that you have makes you feel one way or the other, in my opinion, you're too invested in that position. If it's drawing your attention away from the normal things that you do in life, if every day this dude is waking up and looking and seeing what Caesars is doing, he should probably take some money out, in my opinion.
I would agree with that.
If it has become something that is not, quote, a long-term buy and hold, like we just had this debate with Pepsi and all these things, and I mentioned I don't even look at those things.
Yeah.
If it goes beyond, and this is, I'm not gonna lie to you. Like the last thing with the Dogecoin last week or whatever, I would like, all right, I was drinking, I put like $50 in. I woke up the next morning and I find myself like opening Robinhood and keep looking at it. I freaking sold it off, like paper hand. So like only because if it takes away from what I'm doing, then I'm going to take some, like, I don't want that. And that goes on the positive side too. And that's when I bought out of Vuzi, I was like, oh my God, I'm up so much. And I started telling my friends like, yo, Vuzi, oh, Vuzi. And then I was like, got back and I was like, if I'm talking about it this much, we have to balance out everything we're doing. So if I'm looking to sell, I'm probably looking to sell some things to get back to that flow. Now, if your entire portfolio is up 2,000%, you had a great year. But if you have this one position, I'm saying if you go to bed tonight and you don't even think about it, you just wake up tomorrow like, dope, I'm up 2,000%. It's not time to sell. It's not time to sell. But if you're going to bed and the last thing you do is you check and see where Caesar's at, and then you wake up in the morning and you want to see what Caesar's at, and then you get your lunch break and you take a poop and you're looking where Caesar's at, it's probably, in my opinion, time to sell some of that off till it's a point where it's not consuming your being.
I would agree with you 100% because I know my long-term core positions in my portfolio. If I'm up 100, 200, 300%, I'll be honest with you, I probably wouldn't even bat an eye at it because I know I'm holding them for 30 years.
Right, okay.
So I guess that was the point I was making.
Yeah.
So yeah, I'm glad you followed up with that because that's a great way to put it. If you are constantly thinking about it, if you're like, oh man, what if this goes down to 80? Like, you know, like that's whenever it's a sign like, hey, maybe I should take some off the top here. Maybe take your initial position. If you're up 2,000%, I don't think there's anything wrong with taking off initial position plus a little for the fam or whatever. You know, take a little bit to go have a nice dinner.
Take a little bit for your time. Like,
yeah,
it's not like it's an option where he has to close the option. He can just, he can probably at this point, he can maybe just sell one share of what he got and make all of his initial and then the rest. But
yeah,
it's got to be a little bit of emotional. If you're, and this goes with anything in life, guys, if one thing tips the scale, we're all looking for balance, and balance in our life and balance in our portfolio is the exact same thing. If you have one underlie that is just like driving your portfolio, right? We need to balance. I take Aaron Azevedo. Go with the 10% rule. This dude does not let anything go over 10%. And when when it goes to 10% of his weight of his portfolio, he sells it down. He like rebounces. I don't know if you wake up tomorrow or if you've looked at your Caesar position before you've heard this episode, I think you got to sell because this shit comes out at 5:30 in the morning. So
this is a really good one. When I heard this voicemail come in, I was excited because this is one of the topics that isn't talked about a lot. And I'll be honest with you, this actually may have just created a video idea for me on the YouTube channel from the podcast.
We debated. We talked about alcohol for the first 7 minutes.
No doubt.
And
I swear we're not alcoholics.
And we gave a pretty vague answer. So it's like, sorry, bud.
It comes down to your decision, dude.
Can you let us know? Like, we always talk about the follow-ups.
Like, either let us know in the Facebook group or Discord.
Yeah, or leave us another voice. If you guys if anybody's left a voicemail, I think I saw Heidi's name in there again. So
she did a follow-up to the whole mortgage payoff act. Maybe we'll do that one next.
Please, guys, get in touch with us, and I'm going to let JJ sign us off. I don't really sell that often. Either does JJ. I get my sell fix from trading options and the wheel strategy. But if anything is making you feel uncomfortable, maybe that's why I never thought about it, because Apple's never made me feel uncomfortable. But I'm never bragging to my friends about my Apple position. If I was, I'd probably rebalance it.
Yeah. No, I do sell my spec plays a lot. Like, I'll take profits here and there. Like ZOM, I took profits when it was at like $2, $2.10, something like that. I mean, I sold half my position in that. So, yeah, I mean, my spec plays, I'm probably selling all the time, and I definitely sell under that year mark, which, maybe not be the best thing tax-wise, but I'm also, usually my spec plays, there's not that much money in them. There's really not a huge amount to where I'm going to get hammered with taxes. I'm not up, $50,000 in this position or anything like that. It's usually a few hundred, maybe 1,000 or something like that I made. But anyways, guys, hope you enjoyed this episode. This was a good one. This was the one I knew was going to be a good conversation between Brad and I. So again, if you guys got any voicemails, leave them. There is a link down below in the show notes where you guys can just click record. Got a question about money, whatever it is. Brad and I will give our opinions, our thoughts. And we'll leave it at that. Guys, thank you so much for listening to the Average Money Podcast. And until the next one, you guys take care.